Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is the Kickstart video. The Kickstart video, I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, sterling versus US dollar. From a technical perspective, we're also starting the new trading week, a week after the Federal Reserve cut rates by 50 basis points. The Bank of England kept rates unchanged. Bank of Japan kept rates unchanged as well, which with a more of a dovish slant in a central bank that's looking to quote unquote tighten down the road. So we'll see how all that plays out in the price action today. We did have some data come out of Europe with the flash PMI data coming in much weaker than expectations. That pushed the current currency pairs like the euro versus US dollar, the sterling versus US dollar lower. I don't want to spoil all the fun. Let's get into the technicals. Let's get started. All right, let's take a look at the euro versus US dollar. I'm going to put it on the daily chart first. And I have a horizontal line cutting across here near 1.1184. It was actually defined way back when here and then redefined right here before the market started to rotate to the downside. That was sort of the key and the impetus of that line right there. Admittedly, we went above it through here and then fell below that level, and it was back to the downside here. And this time we came up toward it. And in trading 2 weeks ago, the price actually moved above that 1.1184 level. But in trading last week, what do? We found willing sellers against the level through here. I guess this is last month. This is last week. This is last month. This is a daily chart. And in trading last week, we came up toward that 1184 level, 1.1184 level, and found willing sellers against that level. So keep that level in mind. As you can see, we are lower in trading here today. Now let's take a look at the hourly chart and see what that 84 level look like on that hourly chart. Here it is right here. It also happens to correspond with this swing area up to 897 that I have in this chart. This is the break last month above that 84 level. You can see how it tried to stay above that level, but then failed and rotated to the downside, or use this level right here. We came back up toward that level, moved above the 84 level, and then used that 84 level before moving lower. So you see the importance of it in trading last week. We did break above the 84 level briefly here and then rotate to the downside. That's a FOMC day right there. And in trading on Friday, we came up toward the level, fell off again. Trading here today, we started off low and we moved sharply to the downside here. What was important in trading last week was see these two little points right here where the market held the 100-hour moving average. Well, that's one. That's two. When that produces some memory in the traders' minds. And when we did have that flash PMI data come out here today, the price fell below that 100-hour moving average, and it fell with lots of gusto to the downside, taking out the 200-hour moving average in the process. But since then, started to rotate back to the downside. So the last two times, but below the 200-hour moving average right here and right here, we did see bounce back higher. Now we do have the 200-hour moving average being approached right now, and that level will still become a level of importance for traders. That's this green line right here. We also have this swing area right through here that the green line is near as well, or within. So this swing area was defined way back here. We had a nice little floor here. Each of the time the market bounced off of that, and then we fell below the floor through here. Got squarely through here through the employment data, but then we did have some paying attention to this area right through here and here for the most part, and then we fell below it here on the FOMC rate day, rotating back to the upside. So here we have the other break to the downside. We'll be watching this area between the 1.1097 and 1.1104 level. Also inclusive is that 200-hour moving average, so break below it now, and we could see further downside momentum with maybe this level right here down to the 110.65 level as the next key target on the downside for the euro versus US dollar. On the top side, we would expect that what was once resistance through here becomes or once support through here becomes resistance. So don't expect that the price should move back above the 100-hour moving average. Let's take a look at the dollar versus yen next. And we'll look at the hourly chart here. Actually, I'm going to start off by taking a look at the daily chart. Why? Because you see this at 144.58 level. That's the 50% midpoint, and I like 50% midpoints. They define the midpoint, where it's bullish above and bearish below. So what we did in trading last week or last Friday was move up toward that 50% retracement, found willing sellers. Today what we do, we found willing sellers against 58 level again. I couldn't get above that level and currently trading lower. So that 58 level has a special place in my heart, and that's why I have this horizontal line going across at the 144.58 level to show you how the price moved up toward it on Friday, and we moved up toward it in trading here today before rotating to the downside. Now we are also back. We did move back below another 50% retracement, and that's of this move to the downside here. And note that on Friday the price did come down toward that 50%, found willing buyers against that level. So breaking below that level should have sent more sellers, and we did try to hold it here, and it did briefly, but we rotated back to the upside. Now we're within this swing area through here, which goes back further in time to over here. This is a nice little floor right here, and then we started to use that level as a ceiling through here. And again, in trading last week, with the volatility from the employment situation or the Fed policy situation through here, sending the price above and below the level. But we'll be watching this 50% retracement as well. If we can do move back below that level, we'll have the 100-hour moving average, 200-hour moving average to contend with on the top side. The 144.58, that 50% retracement off the daily chart. Finally, let's take a look at the sterling versus US dollar. And like the euro versus US dollar, we saw a sharp move to the downside within the European session off of those flash PMI data. And in the process, we fell back below this high right here. We called that on Friday. We call this level as a level of support. So getting below that level increased the bearish bias. But you see the rising 100-hour moving average through here. That it did its job. We found the support buyers against that level, and since then we started to rotate back to the upside. So definitely the pound versus US dollar has a little bit more oomph to the upside than something like the euro versus US dollar, with that 100-hour moving average holding the price, getting back above the previous high right through here, and also retracing all the declines that we saw here in trading here today, and they're currently trading at the high. So get above the high price from last week near the 38 level on the top side. And what does that look off the daily chart? Well, here we have this swing area going back to 2021 and 2023. The high of that area I have here marked at 58. So we get above the high price from last week, get above the 58 level, and it opens up the door. These are high levels going back to 2021 and 2022. So it's a long time coming since the last time the price traded in the pound versus US dollar at the 133.58-ish type area. So be aware, be prepared. Remember those days when the pound was around 150 and went up to 2.0. So we're a long way away from those levels. So there's room to roam on a longer term perspective for this pound versus US dollar if we see increased momentum. So that's my Kickstart video to start off the trading day and the trading week for the euro versus US dollar, dollar versus yen, sterling versus US dollar. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.